Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is about 12:30 on October 22nd, and we're now joined by Angie Setzer. Angie is the Vice President of Grain for Citizens Elevator, and she's been joining us regularly to talk about the ag market. How's it going, Angie?
Oh, great. How are you doing?
Good. Things are good down here in South Florida, and we were just talking before. It's getting cold up where you are, and so it makes an interesting
Yeah.
time in grain land.
Yeah. We are trying to get harvest done. And even just really kind of feels like we're just trying to get started with harvest in some areas. It felt like we went from summer to winter almost. With above normal precipitation, we had a lot of rainfall, all that good stuff. So we're just happy to even be in the field. A lot of my customers are now. So
Yeah. So I know that as we've been talking over the past few weeks, you've been supportive of corn prices, and we traded below 350 in corn, and then just last week we actually almost touched about 380. Here we are at 369. So they have moved higher. What are your thoughts on what has happened over the last few weeks, and what do you think is going to be the story moving forward?
yeah, I'm still, of the mindset. I think what we saw in the last USDA report here a couple weeks ago was a shift or perhaps an ideological change when it comes to what we're going to be looking at with yield values going forward. Now, the crop's still big. I mean, now that we're able to get back out into the field and folks are able to harvest and see what the yield numbers are as they work their way across the scale, we're still seeing a large crop, probably in line with where we were a year ago. But where we were a year ago is still about 3 to 4 bushel less than where the USDA is right now on yield estimates. Now, I have no idea what the USDA is going to say. There's a whole group of people that love to speculate as to what changes the USDA will make and how that will impact the market and things of that nature. But I struggle with seeing the USDA make any major change once they've committed to this kind of 180 yield number. Of course, it's possible that they could, and that's the conversation that we're having right now across the countryside. What are we looking at? What's grain flow looking like? And one of the easiest ways, or one of the better ways, to see if production is in line or greater than or less than expectations is to kind of chat with your country elevator folks, people like me and people that handle much more at harvest time than what I do, to see if as harvest progresses throughout the fall, if the expected handling is higher or lower. Going into harvest, someone in my position or someone that runs an elevator across the countryside takes a look at how many acres are out there, what they expect for yield in their production area is what they would look at, and then they take an idea or have an idea as to what they expect to come in. The easiest way to tell if your yields are in line in your area is obviously whether or not you are exceeding or underperforming when it comes to inbound grain. And so far, a lot of the places that I've talked to, at least here recently, they have a little bit less coming in. So obviously we'll have to see what happens as harvest finishes, which we're a way away. We're not even halfway there across the country, or just over halfway. If we've surpassed the halfway mark, we're not very far over it. So we'll want to see how everything finishes. Is it because the basis is wide, which is the difference between cash price and futures? Are farmers finding different places to store? There's a lot of questions that'll be coming up, but at this point in time, from what I'm hearing from yield reports across the country, is that it's a good crop. It's just not necessarily as large as USDA expectations, at this point in time. And a lot of places are taking in a little bit less than what they had expected or anticipated to be taking in based on the percentage of harvest pace, in their trade territory.
So, what do you think based on, corn, wheat, soy? What's your thoughts on, I guess obviously China is a big wild card in all of this, but, assuming that we don't get a whole lot of news from China over the next month, what's your thoughts on where, what are you most bullish and what are you most pessimistic on in that area?
Yeah, I mean, I'm really just watching, obviously at this point in time, it does not appear as though China will be, a big factor when it comes to export purchases and things of that nature. So we're definitely watching that right now. It does appear as though we'll be seeing um, we'll be seeing one second, sorry. It does appear as though we're not going to be seeing their imports to the levels that we'd like to see. You know what I mean? There we're looking at 200 million bushel plus of a reduction when it comes to export sales from China, and it doesn't appear as though we'll be able to catch up to that without a production issue out of Brazil. And so at this point, so far, production wise in Brazil, they're just getting planted. They're off to a record fast start, though. Conditions look pretty good, and it does appear as though China is going to have some more time to kind of wait and see what happens. Unfortunately, it's hard for us if China's going to wait and see what happens, simply because we aren't expecting them or relying on them to come in and take a large portion of soybeans like they typically do. It just happens to coincide with record soybean production. It does appear as though yields are in line or close to being in line with what the USDA is expecting, and that we're going to have soybeans basically falling out our ears due to an increase in acreage and solid yields. It happens to coincide that China's going to back away. We did see them cancel a big chunk of beans here a week ago as well. And so that's concerning. Obviously, we're paying attention to what's going on with negotiations just because it is so important. And right now, I think the administration is really ready to hold their feet to the fire. Just with looking at what's going on in China from an economic standpoint, with their Shanghai composite down as much as it is from the first of the year, and the worst bear market that they've been in almost a decade, and this, that, and the other thing. Obviously some of it is a necessary correction, or a correction to what we've been waiting to see. Since 2015, basically, we've been talking about a slowdown in growth. But I think the administration is really going to work to hold their feet to the fire, which isn't going to be beneficial to us in the short term.
Are you looking for any sort of real volatility into year end in, the major corn, wheat, soy?
Oh yeah, of course. We typically see some as we get towards the tail end of the year. I would not be the least bit surprised to see some continuation of that. I think wheat has a lot of uncertainty. I think people have it in their mind right now that a lot of acres of wheat are going to be planted. I was of that mindset 3 weeks ago until we started dealing with cold, wet weather. I would say that of the increase expected here in my trade territory, wheat is down significantly. We'll be lucky to get close to where we were last year. And I think a lot of other places are like that when it comes to wheat planting. You look at the Southern Plains and things like that. So a lot of traders have it in their mind right now that we're going to see this significant increase in winter wheat plantings. I don't expect that to happen. I think as that window closes here over the next 3 weeks on that side, you'll start to see some volatility come into play on new crop wheat. We still have a long way to go to figure out what Australia's crop looks like. So wheat, I think, will be the one to kind of introduce some fireworks into the market structure here between now and the middle of January. I think the same could be said for soybeans. We'll be watching what's going on in the Southern Hemisphere with production there. Obviously, we're going to be watching what takes place at the G20 summit. If we do sit down and have a conversation, I think there's room for fireworks there. I think last Monday in soybeans, when we rallied 24 cents on basically decent export inspections and a strong crush number, followed by some rumors, I think showed that people want to buy soybeans if they can. And then corn, I think, will kind of follow. I mean, corn has the support. It has a positive story. It has one of the best stories out of the entire group, in my opinion, when it comes to reduction in global ending stocks and things of that nature. But corn doesn't necessarily have to outperform itself, because all it has to do is see a 25-cent rally, and you're going to see a significant increase in corn acres next spring, weather permitting. So corn has to walk a fine line. It has to maintain steady demand, not oversell the supply that we have available, and also be careful not to overdo it when it comes to planting or encouraging farmers to plant next spring. So I think corn will establish a trading range. Soybeans and wheat will be the leaders, both good and bad, but I fully expect to see some real fireworks in wheat, especially between now and the end of the year.
Yeah, we'll definitely keep an eye out on it. It seems like, we had that move above $6 and then it kind of came back, and soybean had a really volatile, it was about basically May, June, July, but other than that, we haven't really done a whole lot. Ags have been really quiet, and with these levels, corn around this 360 level, we're just at pretty depressed levels in all of the above, and I'm just trying to see if there's, even next year, if there's that opportunity to, rally 20, 30, 40%. What's, the possible catalyst? Is it something out of China? Is it something out of, weather related?
Mhm.
Because for a number of years now, we've been pretty quiet relatively.
Yeah. Well, it's all of the above. I mean, China obviously is a huge story. I mean, we've gotten used to them being a big story when it comes to soybeans, obviously, because they're our biggest buyer. On the corn side of things, though, they're chewing through their stocks. I mean, they had an estimated, couple billion to 4 billion bushel, depending on who you asked, of leftover government stocks of corn. They've chewed through over half of that just since the 1st of January. They're working to try to increase their ethanol blends, trying to do a lot of different things with corn. So if we were to work out the trade situation, I actually think in the short term it would be, I mean, it'd be bullish for soybeans just because we are conditioned to believe that good China news is good for soybeans. But in the long term, I think it could have a larger impact on corn, not only from a domestic situation when it comes to ethanol exports into China, but also from an overall feed situation and things of that nature. So I mean, China is huge on so many levels. We do have to watch what's taking place with that African swine fever, though, as well. That's could have huge implications from a feed demand standpoint. With them having to cull hogs and not being able to expand production like they'd like to. That'll also be interesting to watch overall. And then weather in the southern hemisphere over the next 6 months, and then obviously production weather in the U.S. when we get into next spring, will all have major implications on which directions we head.
Yeah. With everybody you speak to and your expertise, do you follow any individual equity names, or have any kind of strong convictions on any equity names based off of your research and your information in the ag space?
Not really. I mean, I watch it out of the corner of my eye more than anything. But really for me, I have to focus on all of the little intricacies that take place in the ag sector itself. Just in general. But I do have, I do watch what's taking place or what's happening out that way, and I say out that way in the equity space, but don't really have much in the way that I would say is concrete in what I follow, who I follow, or what
Okay.
I pay attention to.
Yeah. No, it just was checking because whether it be people that are buying the product, or number of different.
Yeah, it's always interesting to watch ag tech, agricultural, technology, that sort of space. There's a few new groups, Farm Business Network that has Google backing from California. They're definitely interesting to pay attention to and see what they're doing, what they're trying to change. They call themselves market disruptors and things like that. So it's always interesting. Otherwise just kind of paying attention to just the yin and yang of the dollar, currency and things like that. And the equities obviously have a big influence on how our currency trades.
Yeah, absolutely. All right. Well, thanks a lot. Please keep us posted as so the next big catalyst you have coming up. I think you were saying first week in November, or what's?
Second week. Yep. November 9th, I believe, is when the next report comes out, supply and demand. And that's going to be pretty major. Typically, the November report's a big snoozer, but we need to see, we'll have some better ideas as to what is going on from a yield standpoint. And yield this year, especially when it comes to the corn story, is going to have such a huge impact on, market direction. If we were to see another reduction in yield estimates, based off from what we saw USDA were to come in and lower that production outlook, things could get really interesting really quickly. Based on the idea that we already are relatively tight. Obviously, the USDA coming in and increasing yields like they have has taken away some of that tightness. But if we were to go backwards, back towards what we were looking at from an idea standpoint in midsummer when we're talking about stocks to use ratios across the globe, if we were to see production levels fall back to using like a trend line at 174 or something like that, then things could get really interesting really quickly.
Yeah, absolutely. I guess those, we've seen some volatility definitely on those reports. And then at sometimes, like even just looking at that corn chart in mid-September, we had that one release. I'm not exactly sure which one that was, but it was a big one. Corn dropped and continued to
Hmm.
drop over 5 days, but then we've retraced that and then some. So it was definitely a buying. Some smart buyers were in there buying the dip below 350.
Yes. Yep. Yep. September was the first month that the USDA came out and actually increased yield above private expectations. And then you saw October come in where they lowered it versus expectations. And so, if we were to see a continuation of that lower yield, if we were to see them move kind of in that direction, continue to do so, then things could definitely get interesting really quickly. Now, on the flip side, if they were to come in and raise yields back up to where we were in September or beyond, then you have a but then, of course, we're going to be watching what happens in South America. Planting pace is ahead of average down that way. They're working to get the crop into the ground to take advantage of, the shaky relationship between us and China and us and some parts of the world, elsewhere. And so we'll definitely want to see what happens with their overall production there as well.
Yeah. All right. Well, thank you very much. That's Angie Setzer, Vice President of Grain for Citizen Elevator. We appreciate the information. We'll talk to you soon.
Thank you. Have a good day.
All right.